For all the people that watched my last video and liked and subscribe, I just want to give you a round of applause for that. Thank you guys. Appreciate it. I've been studying the pre-market 8:30 to 9:30 opening and trading that for like almost the last year now, just hard every day studying how it works. And I think I've cracked the code, and I'm going to teach that to you today in this video. It's combining the power of 3 with like a Judas swing for you to be able to understand exactly how to take this trade and do it properly and not lose money. I need to walk you through power 3 real quick, and then Judas swing, and then we'll jump in the charts. So let's go ahead and get started with explaining power 3 to you guys. So to understand power 3 and to trade it, you need to look at a daily chart and understand that there's an opening price just like any other candle, whether it be a 1 minute or 1 hour, and that is the opening price of that candle. And then there's a closing price, right? So power 3 is basically trying to get long at the wick of the daily candle below the opening of it. That's where institutions are going to want to get involved. That's where smart money is going to get involved. And so I kind of use that as a guide for where the market's going to go in a specific time frame as a draw on price. So let's go ahead and go into the different stages of the power of 3 and how it actually works. Okay, so this is a bearish example, a bearish power of 3. So the first stage is the accumulation phase. When price is trading at and above the opening price, smart money is accumulating a short position. So they'll be trying to enter above the midnight opening. I have it marked out in yellow there in the red line. That is the midnight opening. I have it circled there. You see that above that is where smart money institutions will be accumulating net short positions. They're also willing to get short as long as it's in close to it. You know, it's not like too far away in the middle there. Sorry, let's go to the next slide. So we know that smart money, right, and institutions are going to try to get short above the midnight opening price. So that means there's going to need to be some manipulation being taken place, and that's where the Judas swing comes into place. And it's just get resale traders on the wrong side of the market. They're going to think it's a breakout or whatever they be thinking, and that's when we're going to be going short. So I use this as a way to kind of predict where the market's going to go from 8:30 to 9:15. So let's go on the next slide here. So this is a distribution phase. This is below the closing price, making the wick of the bottom of the daily candle. As you can see there, you have the closing price in yellow, and then the bottom. That's where smart money is going to be getting rid of their shorts and buying back. So that's what causes sometimes there to be an end of the day rally at the very end of the day. Sorry, now we can move on to Judas Swing. I hope you guys kind of understand the concept of Power 3. I'm not trying to break it all down here. I just want to give you guys a good understanding that you can move forward with to take this morning trade. Alright, so incorporating the Power of 3. Anticipating the upcoming day is bearish, now we can incorporate the Power of 3 intraday. So you're going to use the midnight opening, mark it out in time, and then from 8:30 to 9:45 New York time, we want to see the price trade towards the midnight opening price to act as a manipulation and kind of trap them. And that will be a Judas swing. So we'll go ahead and go to the next slide. I just have a slide breakdown that's going to show you like how it looks. Alright, so here we have a little infographic to show you guys. So you have the midnight opening price in the orange there, and then the gold, that's the Judas swing. So you see where it marks out 8:30. If you follow it up to where the Judas swing and the 8:30 are together, that's about where I'm looking to get long, and then riding it into the New York opening, and then exiting, and then New York opening into a fair value gap or equal highs or something like that. So now, I hope you guys understand what Judas swing is a false price movement, right? And then we're using the opening price and knowing that there's likely going to be manipulation being taken place, and we're going to ride that up or down if it's a bullish day. Alright, now we can go in the charts. Let's go, guys. Let's do it. Alright, before that, I need you guys to like, subscribe, and share the video, and then I want you to comment below what you think this trading model's name should be. I would really appreciate it, guys. It helps move my channel up. Funding companies that are legit, because I am funded with them or have been. You can click on Verify Trader Funding Discounts. This gets updated anytime there's a new discount. Currently, Blue Knox has an 80% off option 1. If you use the code KING80, and Apex has an 80% off as well. And the UProfit 30, and then Tick Tick Trader. I have been funded with all these except for Tick Tick Trader, but I have a good friend of mine that I've known since I've grown up that is funded with them. So now let's go and get in the chart. Sorry about the shameless plug. Sorry about the shameless plug there, but I gotta promote myself. I'm gonna walk you through the steps to get into this trade. If you don't have access to ES, you can use SPX 500, works as well. So the first thing you need to do in the morning when you open your chart, this is a 1 hour chart, this is a chart that I find this setup on, is you go ahead and find the midnight opening price. So that's right here, the bottom of this candle. We're going to put the line right there, right? That's step 1. You mark it off so you know that's it. And then you're going to look for equal highs. So I automatically see that there's equal highs right there. And then you're going to look for imbalances that are above the midnight opening. So there's a fair value gap right here, right? And then you mark that off. And then I see another fair value gap right here. So then you can boom, put that there, annotate it, and then mark off your equal highs so you know that that's what they are. And then I put the magnet here because that's what the equal highs act as, a magnet, right? We know that because there's stop losses above there. The midnight opening also acts as a magnet. So that's how I came up with this trade, is I noticed that from 8:30ish to 9:45, if we're well below the midnight opening, I don't know how well below is, but I'd say at least 20 to 30 points below the midnight opening, it's going to draw price back towards it so the institutions can enter short. Step 1 is on the 1 hour chart. You mark out MOP, midnight opening price, extended in time. That's this. You go to 12 a.m. Eastern time, and you put the line on there on the 1 hour chart. This is now the 15-minute chart. The second step on step 1, part 2 of step 1, is you find the equal highs on the 1 hour chart, mark those out. Then the third is fair value gaps above the midnight opening on the 1 hour chart. So now here we are on the 15-minute, and I just want to show you this, guys, because it is important. So if you were doing the 2022 model, there's your shift in structure, right? And there you have a fair value gap. Model should be called, I haven't named it yet, so comment in the comments, and or maybe I'll run a community poll, and whoever wins, then I'll name it that. But it's definitely a trading model that I've been trading for, I'd say, at least a couple months now, pretty regularly. Before I was kind of like putting all the pieces together, because it's hard putting all the pieces together with ICT's strategies because there's so many of them, so many concepts, but this is one I put together into a solid trading model. So let's jump into the 2-minute chart now and show you how I took my trades. And I want to note that in Q made a higher high while ES ran the liquidity. So that's something to note. That's a SMT divergence. So I can go forward a little bit, and then this is the 15-minute fair value gap that I noted on the 15-minute chart. So you have to see this. You have to see price moving from 8:30 on towards the midnight opening. And then so this is where I actually entered the position, is 8:24, 3 contracts. I put my stop right here, thinking that it shouldn't go below the volume imbalance, and if it did, I wanted to give it just a little bit room to wick around. See how price is respecting the volume imbalance there? That's very important. It acts just like a fair value gap. So I entered here, right? So 71, my stop's 3 points. We're at 76, so that's 5 points profit. I exited one position somewhere in here. Price comes all the way back down. See, if I hadn't exited one up here, I would be scared right in here. So it's 9 o'clock now. And the reason I pull up NQ is because if one takes the liquidity and the other one doesn't, they both can rally in the same direction afterwards. This price starts moving up. We're getting close to the open here. It's at 914. So I didn't, but you could have added one on back there because the closes respected the volume imbalance. And then there we go, right at the open it blasts up. So I had 2 contracts on. I exited here because I know that there's a fair value gap here on the 2-minute chart and the 1-hour chart, and I didn't like how it reacted here. And then I don't have it marked out on NQ, but it was the same thing. So I'll walk you through my decision making on adding again to the position with NQ and ES. So we have a big drop down, right? So something, I don't know if you guys ever studied the strat, but I have, and it's something that I believe in. I think the broadening formations go really well with ICT's concepts. So that's inducement. It's the inducement is the same thing as the broadening formation. So it goes up, down, up, down. So I saw this forming on NQ, but I didn't see it on ES. So based off of that, we have the fair value gap here right on the 15-minute chart. It's here too. So we'll go ahead and move price forward. Kind of bounces around, puts in a there. Finally, that's your 2022 mentorship model. You got a market structure shift on the 15-minute, put in a fair value gap. So let's go over to NQ. So that's the same right here. So I posted about this on Twitter the other day. At the opening on NQ, the risk reward is well worth it. Plus you got a fair value gap here. So I entered 2 contracts on NQ and 2 contracts on ES, expecting it to attack those equal highs. So let's go ahead and fast forward here. And then it continues just to rip up, guys. Why? Because you have equal highs up here are drawing price towards it. Midnight opening, this is where institutions are going to want to get involved. So let's look at the profit here. So my risk was the bottom of this fair value gap, so 68. I probably got in somewhere in 72s, and then I immediately, because it happened so fast, like once it immediately started pushing up, I exited 1 on this. So we got 70, 15 points or so, and NQ was just blasting off from here. I think I exited 1 right in here, so that was 84 to 30 is like 50 points. And then by then I'm at my daily, like my goal for the day, which is $2,000. And so I exited in here somewhere in here. Not trying to be greedy. I always I believe in treat it like an ATM, get your money and walk away. And that was the end of the trade. So here's the 15-minute. I just want to go over this after going over the 2-minute chart. So you have the dip down into there, right? There's your 2022 mentorship model. You have a market structure shift, a run down, takes out the equal lows there, and then rallies up, takes out the equal highs. So don't overcomplicate this, guys. Equal highs, equal lows, fair value gaps, and use this midnight opening and make sure it's moving towards the midnight opening and your draw on liquidity from 8:30 to 9 o'clock. It's that simple, guys. It's a 3-step procedure. Then you get down a small time frame and get entries with fair value gaps or whatnot. So now you guys see, so if you're interested in my one-on-one mentoring, I only have room for a couple more students. I will leave the link in the description to my all my socials, which I have a Facebook group, and then I have a Twitter, and you guys can DM me there to talk about it more, or you guys can go ahead and sign up. It is through PayPal. You can pay with debit card or MasterCard, and then what PayPal does is they guarantee my service, so if something happens, which it won't, you would be eligible for a refund. So please like and subscribe. Check out my website if you're interested in funding. Look forward to making another video for you guys. Thanks.